If you're an owner of a small business, employing your spouse and children can help reduce your family's income tax. By the way, sometimes a huge amount. Kenner French with vastsolutionsgroup.com. We do tax, finance, and artificial intelligence for entrepreneurs. We've saved hundreds of clients, thousands, if not tens of thousands, if not hundreds of thousands of dollars over the 50 years we've been around. Please don't forget to like this video and also subscribe to the channel. You're going to like this. By the way, speaking of liking, if you stay to the nearly the end, you're going to get a little bonus. Now let's get to it. Now this is going to apply to whether you're running a business as a corporation, as a partnership, as a sole proprietorship, whatever the case is. Putting a family member on your payroll makes that person's income and the proportional cost of his or her employee benefits deductible, a deductible business expense. As a result, the gross income of your business is lowered. What does that mean? It lowers your family's aggregated taxable income. Let's say, for example, your wife, Janet, her take-home pay for her job as a sales manager of some company is $100,000 per year. That amount is included in your family's income, likely pushing you potentially into a higher tax bracket. But if Janet worked for you as a sales manager, let's just say, earning the same amount, her taxable income will provide your business with a deductible expense, ultimately lowering your family's overall tax liability. Here's some really good news. Now and later, as an example. Now, suppose that you and Janet have a teenage daughter, Sharon, who has computer skills. If you directly pay Sharon the going rate for maintaining your database and keeping a record of her hours and the work performed, her salary is, you guessed it, tax deductible as a business expense, as long as her wages are less than $6,300, the standard deduction currently. Her income will, therefore, be non-taxable otherwise. Income above that amount will be taxed at Sharon's presumably lower tax rate. Putting Sharon on your payroll, however, means you cannot claim her as a dependent. Now, imagine that daughter Sharon is still an infant, let's just say. If Janet, your spouse, works in your business, the cost of paying for her childcare while she works will be lessened through the allowable childcare tax credit for such expenses. Now, if it were 20 years in the future, having Janet on the payroll could help out with your retirement planning. Subject to the terms of the plan, depending, and your business not maintaining a defined, let's say, contribution plan, your business's pension or defined benefit plan, which qualifies under ERISA, the Act of 1974, as amended, allows Janet to receive an annual minimum distribution of $10,000. That's regardless of whether her salary ever got that high. Most importantly, during her 20 years of service, your business was able to deduct contributions to the plan on her behalf for the gross income. Now, let me explain a little bit about a defined benefit plan and what they are. They are plans where a business owner can put in large amounts of money. What does that mean? Huge deductions. And what does that mean? Humongous tax savings, simply. Now, sometimes there are circumstances where people can put away as much as $200,000 into a defined benefit plan. That potentially could mean maybe even a $60,000 in tax savings for you. Plus, if there are no employees, all the benefit goes to the business owner. Yes, you heard that correctly. Now, alternatively, let's say a business offers a 401k plan, a type of defined contribution plan. Then the contributions are made by your business to Janet's account up to a certain amount. Also, that would qualify as a tax-deductible business expense. You're getting this, I can tell. IRAs, your family's friend. If your business does not offer a qualified retirement plan or family members like Janet and Sharon do not participate in such a plan, then an individual retirement account or an IRA would be available to employed individuals or their spouses as an option. IRA contributions may be deductible for the employee but not to the business, and allow for tax deferral on earnings until the withdrawal. Now, certain years individuals can make deferred contributions up to a certain amount. Really depends on the circumstances. You can call the office to get the amount. Now, meanwhile, a savings incentive match plan or a simple IRA allows tax-deductible salaried contributions up to a certain amount depending on the year, etc. Now, contributions that are matched by the employer are deductible as a business expense. Also, these things called SEP IRAs, also allow employer contributions up to $25,000 of eligible employees' compensation. It's limited compensation up to certain amounts. In addition, you and your employees may make regular IRA contributions to the same account, in sickness and in health. As employees, Janet and Sharon are eligible to other employee benefits for your company, providing, maybe even accident and health insurance, group term life, tuition assistance, etc. The cost of these benefits, assuming they're reasonable, by the way, are also deductible as an expense. You should keep in mind that employing family members means they must actually work in the business for compensation that's reasonable or market for the type of work they're performing. Also now, be aware that the tax status of any retirement account or plan vehicle, such as 401ks, etc., they're strictly governed by government regulations, and you have to cover all employees potentially. Now, nonetheless, putting family members on the payroll can offer clear financial and tax benefits. Remember, always consult with a tax professional or financial professional before making any of these decisions. Now, as I said at the beginning, you're going to get a little bonus for staying tuned. And thank you for doing so. If you send an email to einstein@vastsolutionsgroup.com, we'll send you a copy of my book. It's called The Entrepreneur's Manifesto, a collection of smart financial advice, as well as a gift card for $50 if you're one of the first 10 people to email us. Again, copy of the book, $50 gift certificate to, you guessed it, Starbucks. For disclosures, call the office at 888-808-8278. Or, again, if you have any questions, you can check us out on the web, www.vastsolutionsgroup.com. Or, again, give us a call at 888-808-8278. Please, once again, click that you like this video and subscribe to the channel. And once again, Kenner French, it's been a pleasure, and thank you for spending the time to watch this video.